Alright everyone, and welcome back to another video here. We are going to today do a deep dive into one of the multi-day runners, PIK. Now what you're looking at right now, you're looking at the Thinkorswim platform. This platform I really like to use because I like how the layout is for the actual platform itself. I actually utilize this platform more for option trading than day trading. However, you can utilize it for day trading as well. So what we're going to do, we're going to go ahead and jump on into it. We're going to take a quick look. I always like to keep these videos pretty succinct, so it's probably going to be about I try to get it in between 12 and 15 minutes tops because I really want you guys to get the concept and then be able to go back over it again if you absolutely need to. So with that said, we're going to go ahead and just take a quick look, jump on in, and see what we got going on here. Okay, so as you can see, and I'm going to give you an overhead tutorial of it too, just in the event that some people may be watching this that have no idea what they're looking at in relation to why some spaces are dark, some spaces are light. So we're going to go through all that real quick, and then we're going to jump into what we were looking at here. Okay, so as you can see, this area where I have my cursor here is the normal trading time, okay? This time here that's gray is pre-market. This area here that I'm in is after hours, okay? So, and you can also tell here by the bottom of the screen too, it kind of gives you the date. So you're looking at Wednesday, Thursdays, Thursday's information, and then Friday's information, right? All right, perfect. So now that we got that out the way, as you can see on Wednesday, before the breakout took place, PIK was trading at $1.50. Okay, so as you can see, there was no volume whatsoever as well. All right, and this is not atypical for these types of stocks. Okay, the main thing that we look to identify is when these stocks begin to run, what we look to do is we like to get into the meat of the move, okay? That's pretty much what we're looking to do here, guys. We're not looking to try to time it down here and then, sell it up here. Because the thing is that the vast majority of us, we won't know when this move is set to go. We have to be reactionary to the actual move itself, okay? So, with that being said, as you can see, there was some pretty light movement here from the low, which is the 150. As you can see, it got up to 198. So if you were in this, beforehand, if you had the crystal ball, then that's awesome because you made some money here, okay? But as you can see, everything began to happen pre-market Thursday, okay? And you can also tell because if you look at the bottom of the screen, you see the volume down here, and you actually see the time. You see how it says 5:30, so that's when things began to move, okay? Now, one thing that I suggest is I actually suggest to trade during regular market times. Now, there's people who trade pre-market, which is this area right here. There's people who trade after hours. Once you get your footing, once you get a good idea of what it is that's going on and kind of get a good gauge of the flow of pre-market as well as after hours, then by all means go for it. Because one of the things about pre-market is you can see going down to the bottom of the screen, remember at the bottom you see volume, so all this down here is volume, okay? What we like to tend to look at, guys, is we want to see lots of volume. We want to see lots of this blue down here, okay? Because this is going to tell us the whole story. So ultimately what happens in pre-market with PIK, you have this crazy run up here, okay? Now what we're doing too, let me just take a quick step back. You see we're looking at the 5-minute candle, okay? So all these candles you see are of the 5-minute variety. You can adjust the candles if you so desire to do so. You could take it down to the 1 minute, 1 day. So this is what happened over the course of the previous trading day, which was Friday. I love the 5-minute, 5 day because it gives me just enough information to tell me, what was going on previous to the move and then what's going on in the move, right? as you can see there. Okay, so this is one of my favorite time frames. You guys will kind of decide as you go what time frame is ultimately going to work for you guys as well. But ultimately, 5 minute, 5 day is one of those classic time frames because, like I said, it gives you a really good idea. You can see the meat of the moves, right? And you can get a good idea of the pattern formation. Okay, so with that said, so as you can see, in pre-market on Thursday, this thing begins to run like crazy. Now, there's a few places that you can go to see, what things are moving in pre-market. And we'll talk about that too in another video. We'll actually go a little deep into that. But for right now, as you can see, yeah, there was movement that was happening in pre-market. Okay. Now, this is very, very important. This is what I kind of want you guys to understand. Before this move that happened in pre-market, we see this little run up here. Okay. So this little run up doesn't look like much, but it's important because this is a telltale sign because before that point there was nothing that was happening. It's pretty much stagnant. Then you get this little minor move here. So what happens is, someone knows something at this point, right? But it's not public information, not public knowledge. So it moves, okay. Then you get this little dip down. That's fine. What we want to do, as you can see where my cursor is right now, we draw a line, you go furthest to the right, you see it's at 198, right? So that's pretty much where that first move kind of took place, right about here. 197, 198. So what it does in pre-market of the next day blows through that 198 because as you can see with that one candle alone, the open was 184 and the high was 250. I got that information from up here. Okay, guys. So whenever you move on a candle, it's going to tell you the information up top of what happened in that time frame. So as you can see, it says O stands for open, and that's $1.84. The high for this particular candle got to 250. The low was 184, which is also where it opened at. So when you see those indicators like that, that's a clear sign that it's an extremely bullish move, okay? And as you can see at the bottom of the screen, there's a lot of volume that's taking place too. These represent in the millions, okay, for a 5 minute time frame. Because remember, we're looking at the 5 minute time frame, okay. So with all that said, this first candle, and actually what we can do is we can blow it up too, guys. So this is what we're going to do. We're going to highlight it and blow it up. Okay, so as you can see with this first move right here, you have this candle, boom, this thing jumps like crazy. Next candle, green candle, 5 minutes, boom, a huge one. With it has a tail at the end, but that's not really that bad because what happens in the next 5 minutes, it basically encompasses this entire tail that you had here, right? Or top, I should say. So it encompasses it in the next 5 minutes. Okay, so what's happening right now, guys, if you take a look, you have 5, 10, 15, 20, 25 minutes where you have nothing but green, okay? That means something's going on, all right? Now, the next set of moves that you see right here, this is what we call consolidation, okay? Because what happens with some of these sometimes is you have these where they'll shoot straight up and then shoot straight down. It didn't do that. It stayed in consolidation mode. So when it stays in consolidation mode, you have now this is the open of the day, okay? So with the open of the day, it happens at 6:30. The 5 minute candle, as you can see at the bottom, you have a ton of volume. So what happened was, by the time this move was made, it's on everybody's radar. So people are saying, okay, let's see what happens in the next set of moves. This next set of moves, it doesn't go back down. It kind of consolidates, stays in the same range. So when it stays in the same range, that's a clear indication that it's probably going to pop off. So what happens is people rush in, and as you can see, it opens literally, the open up here, the high and the low. We'll take a look. So on this first candle, as you can see, you have the open at $3.40, shoots up to $4.23 on the high, and then 330 was the low, right? So right there, as you can see, tons of money is getting made. Go over to the next 5 minutes. Same thing. So it opens at 4 in the next 5 minute time increment, hits to the high of 430. Now, as you can tell, there's a lot that's happened by this point. And this is only 10 minutes into the trading day, guys, because you're at the 6:30 candle here. The next candle at 6:35. So there's a lot going on here because you got to remember the low was 3:30, the high was 4:30. So right here is 1 point, guys. And one thing I can tell you unequivocally is that if you can get a point in a trading day, you're winning, okay? Because you just have to understand how trading works and how money works in general. If you traded 100 shares of this stock, okay, and you were able to literally time it where you got in at the 3:30, which was the low, and you got out the high, which was a 4:30, you made 1 point, which means you made $100, but you made it in 10 minutes. Okay, so that's the power of trading. This is the power of being able to read a chart, being able to dissect it and say, okay, based off this information that's happening in pre-market, with the consolidation that's taking place right here, there's a high likelihood that this thing is going to blow at open. Okay, now as you can see, there's some consolidation that takes place because in the next candle is a red candle. You have a red candle following that. You have a slightly green candle, which is a good sign as well. But then you have the red candle. So now you have some downward movement. Now, if you're still in this trade at this point, it's not necessarily the end of the world, and I'm going to show you why soon. But this is one of these things that we look for, guys. It's called the gun formation. A lot of people call it ABCD formation. There's a lot of different terms for it, but just to keep it extremely simple, guys, this is what we look for. We look for run up. Okay, so you have the run up right here. We look for the consolidation that takes place right here, and then we look for the explosion. And that's what we got right here. And that's really what I want to focus on with this video in particular, because what's starting to happen now that we're seeing in the marketplace is we're beginning to see these kinds of trades come back into the marketplace where you're having 150% gains on a day, 200% gainers on a day, 400% gainers on a day. This has all happened within the last 2 weeks. And so as you can also see here, you have the actual volume number down here. On this particular candle, you can see there was 9 million shares that was traded here. So there's a lot of volume in this stock. That's something that you have to take a look at too and kind of understand. So again, we can zoom it back out. And this is what we were looking at right here, just this time frame right here. So, like I said, it's one of those things where when we really begin to break this down, we can see that there's a lot of opportunity here, guys. So, what I want you to do, if you haven't already, I want you to I want you to subscribe to these videos, because I'm going to break it down, make it very, very simplistic for you guys. No matter if you're a novice trader, no matter if you're an advanced trader, there'll be some things that you'll be able to see in here as well. That you'll be able to identify and be able to assist you as you go along. Alright guys, so this is the end of this video. You guys stay tuned to more videos. We're actually going to go deeper into this and PIK down even more. Till the next time, guys, we'll see you around.